Okay, so good morning, everybody. So I had asked the council for this work session to provide an opportunity for there to be some overview on some of our finances as we start getting into our 2022 annual budgeting process. So our work session is scheduled for next Wednesday with the recommendations for the 2022 annual process. The first part of this presentation, I've asked Mark Gassaway from our finance team. He's our finance director in the auditor's office to present an overview of the financial policies and also provide an overview of all of our major funds. Following that, I have asked Treasurer Alicia Topper and Assessor Peter Van Nortwick to provide some information on the property tax and the 1%. They did provide some information last year to a couple of counselors and myself, and I thought it was very valuable in understanding the property taxes and thought it would be good for the entire council to hear this as well as our community. So with that said, I'd like to hand this over to Mark Gassaway first for him to provide the overview of the financial policies and the major fund overview.
Thank you, Kathleen. So we could start the PowerPoint. Great, and I can't see myself, so I will just speak. I'll just speak. And council, as we go through this presentation, feel free to stop and ask questions at any point in time. It's meant to be a bit of a discussion rather than just a lecture. So please jump in if you have questions. So in the last few months, we've had quite a few opportunities to present to council about Clark County finances. We've reviewed the financial statements with you, our annual financial statement, our trends report, some of our major reports, including our new popular annual financial report, our PAFR. We've talked about some issues regarding debt, and I wanted to take the opportunity this morning to talk about really the foundation of the financial principles that we use here at Clark County. In one of those reports that was presented to you, the trends report, the county council fiscal policy plan is included. And just briefly, I wanted to talk about that today. So if we go to the next slide. Whether you realized it or not, the county council has a fiscal policy plan. This plan was adopted initially in 1982 by the Board of County Commissioners. It was updated in 1994. And the purpose of this plan is to help guide all of the things that we do financially here at the county, whether it's accounting, whether it's financial reporting, issuance of debt, taking on obligations in other forms, and particularly it helps guide the process as as we go through the budget process. So the fiscal policy plan, it includes 16 financial policies, and the details of all that can be found in the trends report. And I've also asked that it be the full plan be attached to the presentation. This presentation today, I'm going to take the opportunity to review just a few of those principles or those policies, and primarily the ones that impact the budget process. Since we're kind of in the midst of this budget season, I felt it would be good to review what staff looks at as we help form this budget that Kathleen, our county manager, puts together and presents to council. So if we could go to the next slide. Of the 16 fiscal policies in the county council fiscal policy plan, 10 of those have some influence on how the budget is developed. So I've enumerated those policies here. And I'm just going to talk about those briefly. Policy 2 talks about the revenues, how we look at revenues, and the process of forecasting revenues out in the future, along with expenditures, so that we can see whether we're going to be financially stable out into the future. Though you see that primarily in the general fund, but there's also other funds. There's 6-year forecasts that have been developed for the municipal park district, the road fund, some of the other funds as well, some of the major funds. Citizen involvement, as you know, we have budget hearings that we receive citizen involvement, and I know that probably every day, each of you as counselors are receiving citizen involvement in service levels, and you relay that information along to staff. Excuse me. Policy number 4 talks about accepting grants. Every time we accept a grant, that obligates the county to perform certain services. And so, again, that's something that has to be considered. Number 5, we look at each enterprise fund. Now, enterprise fund, those are more business-like, as you know, and they should be self-supporting. We shouldn't be asking the public to support those types of activities. Next slide, please. Policy number 6, talking about property taxes. You're going to hear a little bit more about property taxes today from our county treasurer and assessor, so I won't spend a lot of time there. Capital facilities, this is an area that has received a lot of attention recently, trying to make sure that we maintain our capital facilities and our equipment. Once we've made the investment, it's our responsibility as a county to make sure that it's maintained and we haven't wasted those funds frivolously. The reserve policy, as you know, many of the funds have reserve policies. This policy 9, we've focused a lot on our general fund balance policy to make sure that it provides stability in many areas, including cash flow and sufficient reserves in the case of unforeseen events. I know that 2 years ago, we were very concerned about what was happening in the nation and in the economy, and we did have a adequate reserve at the time to make sure that we made it through, and we've been able to even strengthen it in the last few months. So next slide, please. Thank you. Capital improvements, again, we've talked about capital improvements, and one of the aspects of capital improvements that we don't have necessarily listed here, but it's included in the body of the text. It talks about the council priorities as far as capital. First of all, we've received the guidance that the county is to provide for its debt and pay its debts first. That's the highest priority that we have. The second priority that we have is to maintain our existing assets. So once we've made the investment in assets or facilities, that we are obligated to maintain those. And then the third principle is before we purchase new assets or begin new programs, we have to have a way to pay for the maintenance and operations of those programs. And a very excellent example of this is many years ago when we had a lot of undeveloped park property throughout the unincorporated area, we determined that it was necessary to be able, before we could develop those parks, we had to have a mechanism to maintain and operate those parks. And that was the beginning or the genesis of the Metropolitan Park District. So 11 and 16, again, making sure that we're looking out into the future, making sure that we aren't just planning for today, and that what decisions that are made today, how they'll impact our future operations. Policy 16, talking about long-term debt. We are not able, and we shouldn't, this is a best practice, we should not be using debt to finance our current operations. And we don't. We have never done that, and we do not budget using debt to finance our operations. So I'm going to pause here just a second before I go into some of the major funds. Any questions on these policies or thoughts that you would want us to reflect on?
Any questions?
No? Okay.
No.
I'll keep plugging along. All right, next slide, please. So I'm going to talk about some of our major funds. Of course, the general fund is our largest fund, and it also has not only the most flexibility, but probably the most responsibility because it funds many programs throughout the county. The budget, these are 2021 budgeted numbers. We don't have a complete year for 2021 yet. We're 2.5 months away from closing 2021. So I put budgeted numbers in for this presentation. So the general fund is budgeted at, the budgeted revenues, excuse me, are 180 million with 187, almost 188 million in expenditures. And it's broken down. The funding sources in the general fund are many. There's, and I'm sure you've heard this number before, close to 300 different funding sources when you include grants and everything that goes into the general fund. These are some of the major categories. Our largest funding source clearly is property taxes, followed by sales tax. And then there's many other sources of revenue as well. Expenditures, again, this is not new information. The majority of the expenditures at the county and in the general fund are for salaries and benefits. We are a service provider, and to provide services, we have staff to do that. So you can see that those are our largest expenditures. Our fund balance, I talked about our fund balance policy in the general fund. Our beginning fund balance for the year is 29.8 million, and we're projecting, or excuse me, our fund balance policy requires the ending fund balance at 30.3 million. So that number that you're looking at there would be, according to our fund balance policy, the required unassigned amount. Next slide. Our second largest fund is our road fund. Again, different funding sources. However, the largest is primarily property tax. There's various other taxes that go in. As you can see, we also bring in some capital related funds through REIT and traffic impact fees. Those are initially collected in other funds and then brought into the road fund for expenditure. I broke down the expenditures a little bit differently. So I wanted you to see that about 70, a little more than 70% is operations related, whereas 27% is capital. And that's, this fund has the largest amount of capital expenditure of any of the funds that we have. They also have a fairly healthy fund balance at the current time, right around $20 million, and projected to be just over $20 million at the end of 2021. So. Next slide, please. The health department, and I've included this one simply because it's had so much activity in the last 2 years. Our health department budget has grown clearly because of the response to the pandemic. Our current revenues are budgeted 21.2 million, and our expenditures are 26.4. Now, that may look odd to you that we have 5 million more in expenditures. We did carry over fund balance from the prior year. There were a lot of revenue that had been received, but we had not been able to spend it. So that was programmed in the 2021 budget. Again, you can see grants, that line 13.1 million, that is coming through revenues that typically aren't quite that large. I mean, we usually don't receive several $1 million from the state. A lot of that is the federal pass through for either the CRF or ARPA funding. So, and again, we are a service provider. You can see that salaries and benefits is a large portion. However, in this case, there has been a significant increase in the supplies and services. A lot of those are contract services that we, again, service that are provided, but we're contracting through other agencies to provide. Our next slide, please. Here's some of the other governmental funds that aren't quite as large, but you are probably aware of. However, I just wanted to review some of these quickly. The mental health sales tax is it's kind of a standalone fund because we wanted to identify the revenues coming in and the programs that are specially related to that mental health sales tax. The event center or the fair fund, you can see that fund has had some challenges recently because of we've not been able to hold the 10-day fair. And so there'll be some more discussion about funding the event center probably in the next year. Camp Bonneville, again, a restricted fund that is primarily to clean up Camp Bonneville. However, it's now transitioning to more operational type fund. And then the exhibit hall dedicated revenue. This is for the retirement of the bonds on the event center. So, next slide, please. Here's some of the non-major governmental funds. Community development is our building fund. It has been doing quite well simply because the activity, the building activity in the county, the growth is continuing. We've been able to support the service levels that we currently are providing with the license and fees. I know that this is an area of discussion simply because they haven't been changed for quite a while, and we've received several nudges, I would say, from the state auditors to make sure that our fees are based on our cost structure. So that's a project that's currently underway, making sure that we are correctly charging for the services that we're providing. So, next slide, please. Parks MPD, again, I referred to this earlier. This fund was created so that we could develop 35 plus parks throughout the county, primarily in the unincorporated area. It's been very successful. I believe we're within maybe a park or two of completing the whole menu of parks that had been originally provided. It's probably 10 years after the fact. However, things slowed down significantly during the recession, and the development of these parks has relied on impact fees and REIT. However, the operations of those parks and the maintenance of those parks is continuing. This is a fund that we monitor quite frequently because of the addition of expenses as we add parks. We want to make sure that this fund remains solvent. So we want to make sure that we're able to maintain, as I referred to in our capital priorities, we want to make sure that we're maintaining our existing assets in the county before we add new assets. So, next slide, please. Mental health sales tax. We talked about this one just briefly. Here's some of the details around it. The revenue coming in is about $9.6 million. The expenditures in this fund are a little bit unique. There's a advisory board that is made up of the various participants, the people that receive money, and they evaluate projects every year. I know in the last year, because we had so much uncertainty, we did not probably approve as much in expenditure as we could have, simply because we just didn't know how the revenues would be received. So I believe that this committee will become active again in looking at projects and be able to recommend to council additional ways to serve the community with this revenue source. Next slide, please. Then I just wanted to just briefly review some of the other special revenue. We've talked about REIT in the past, traffic impact fees, and the number out to the right is how many different funds there are related to these particular revenue streams. We have 21 park impact fee, different funds, conservation futures. I know you've heard some discussion about recently as well. And then we have a technology reserve fund, which allows us to do projects, update our software, and maintain, again, the maintenance of existing assets, making sure that we're maintaining our existing networks so that we are able to function, particularly in this this online environment. So, next slide, please. Some of the enterprise funds we have the golf course, Tri-Mountain. We also have a solid waste fund, a clean water fund, and a wastewater maintenance and operation. Now, these funds, by definition, should be self-sustaining. The fees that are charged specifically for these services. And so as you receive requests for these funds in particular about rate changes, those are calculated to make sure that we are paying for these services, just like a utility or just like a business. I think that's the best way to think of these particular funds. So as costs go up, we should be recovering those costs. We shouldn't be relying on general tax revenue to support these funds. Next slide, please. We have several internal service funds. As you know, we had a lot of discussion about in the fall supplemental about insurance. Our general liability fund helps handle the insurance for the county, which is getting more expensive, as we know. We also have a portion of our healthcare benefits is self-insured, and that is something we're constantly monitoring to make sure that we have adequate reserves there. Equipment rental, ER&R or fleet. We also contribute the different departments or the different customers of that service contribute, and we need to make sure that everyone is contributing based on the services they're receiving. Essential support services or facilities that maintain all of our facilities. And then major maintenance is a fund that we use for large capital repair projects. So next slide, please. Is that the last one? Okay. So in all, we have about 80 operating funds. There's many other funds that we use for accounting purposes or for clearing purposes. But these are the major categories and some of the major funds. As we go through, again, this budget season, you'll be asked to make decisions on pretty much all of these. But again, not all funds are equal. There are funds that we have very specific restricted purposes for. And then at the opposite end of the spectrum, we have the general fund, which has to cover many activities, many services, and is not as restrictive. So again, if you have any questions, that kind of concludes this overview. Again, just kind of a refresher so that you have the ability to make decisions as we go into this budget season. So that's all that I have for this presentation. So
thank you, Mark. Did anybody have any questions before he leaves the floor?
Madam Chair, I have a few.
Councilman Medvedev.
Thank you. So let me start with, I think, the quick questions first. Regarding the enterprise funds, I've never really gotten clarity on two of them. And maybe you won't know off the top of your head. The English Pit, I understand there's only a couple years left on that contract or lease for that area, but has anyone audited that? What is the flow of funds? Are we seeing any of that revenue? And does it pencil out? Because at some point, lead cleanup will be extremely costly. And I'm wondering if the lease that we have there will cover all cleanup costs and is providing us with adequate revenue. The other related enterprise question has to do with Tri-Mountain. I've heard that it is sustaining itself, but has that ever been audited? Are all the expenses really placed against all the revenue there? Are we really having it sustain itself? So those two questions, and then I had a question about the general fund after you answer.
Okay. Quickly, I'll start with English Pit. That is not necessarily a fund that we manage. It's more of a contract, and I can get into more specifics about that. But there's been a lot of research and involvement in that, more so recently, simply because some of the questions that have been asked from citizens. And probably it would be easier, rather than talk about it in this, to just sit down with you and explain where we're at with that. Again, it's more of a contract that we have, a county resource that we're contracting to a private individual or private firm. On the Tri-Mountain side, yes, the operations at Tri-Mountain have always been positive. In the past, we've had, in addition to the operation side, we've had a debt payment on the bonds that we used. Those bonds have been paid off now. So currently, the only thing that goes through the Tri-Mountain Enterprise Fund is the operations piece, and that is also under contract. We don't physically staff the Tri-Mountain Golf Course. It is under contract, and through the contract, it ensures that the county receives a return, and then the operator also participates in any profit that comes through the Tri-Mountain Fund. So, and again, yes, it is audited. The Tri-Mountain Fund is subject to audit, just like all of the funds within the county. So
I can also share that Michelle Schuster and her staff oversee that contract, and they are actually putting together some financial information to be shared with the council.
Thanks, Kathleen and Mark. So I do look forward to further discussions on the English Pit. So I wanted some clarity, if you can. You and I have talked a lot about this offline and also during some previous public meetings regarding our tax leakage. So the question I have is really focused on this period during the pandemic. I've heard some general statements that our sales tax is doing much better than anticipated during the pandemic. And perhaps that's because everyone's shopping online more. I don't know. But what does that look like? I mean, if we didn't have tax leakage during the pandemic, would we have even greater tax revenues because people are shopping? When do you expect? Well, I guess the question is, do you have a different forecast right now than you've expressed? That the kind of the median was about a 25% loss every year to tax leakage. Do you have a different view on how that looks now because of the pandemic?
These are all very good questions. I don't have exact answers, but I also, I suspect, just like you do, Counselor, that the increase, that there's not a lot of explanation for the increase that we have in our sales tax, other than two factors. One, there's been a lot of money pumped into individual households through, the tax payments through the government that people are spending. In addition, people are shopping more online. I have talked to the Department of Revenue to determine if we can find out what our sales tax from online sales has been. I don't know if they can classify it that way, but that would be an incredibly interesting piece of information. I suspect, again, just like you do, that people are shopping online, staying home. You know, when people don't drive across the river to work, they don't have lunchtime to go out and shop or stop on the way home. So I think a lot of that has come from the growth. And thank goodness, several years ago, they passed what they called the Marketplace Fairness Act, which required retailers to collect sales tax to the destination. Prior to the Marketplace Fairness Act, we would not have been able to benefit from those online sales. So that the timing of that, I believe, has helped us a lot. It would take, and you know, something that we can look into, trying to understand the sales tax increase. No one would have predicted this 2 years ago. I wouldn't have predicted it, but it has been significant. So that number of sales tax leakage, I again suspect that it has decreased significantly in the last 18 months or so.
Thanks for that. I look forward to further discussions. And I do want to give some credit. You mentioned the Marketplace Fairness Act. You know, who would have thought? I mean, when I was an online shopper, I really was repulsed by the idea of taxing those purchases. But I think Sharon Wiley, our local legislative delegation, may have kind of led that charge, and it's really come to our rescue during this time period. So I do want to give her some credit, at least in our conversations. She was informing me about her role in that act.
Yeah, and there was a lot of work done by finance officers nationwide and our finance officer organization to lobby in Congress to make sure that that was in place. So.
Are there other questions? I was going to ask too, Mark, about the enterprise fund, the Tri-Mountain. And so I'm kind of surprised to hear you say that it always has been positive, but I guess what would explain that is that we don't have we were paying off debt and now we aren't
Correct.
doing that any longer. So maybe the picture looks a little bit better than I had understood it to look. I thought it's eking by, certainly not a big money maker.
Yeah, I don't know that it's a big money maker, but the debt payments had always been paid from one of our debt sources, a different source other than operations. So
I see.
it was kind of an off book. I don't know if that's the right term, but. So.
I see. Okay.
The other
Thank you.
thing,
Are there other questions?
I
Go
was gonna
ahead.
say, the other comment I wanted to make is 2021 is a little bit unique in the fact that there are some things in these budgeted numbers because of the federal relief funds that I've tried to normalize so that we wouldn't show there's just some huge anomalies in revenues and expenses due to the federal relief funds, but I'm trying to normalize those so that you don't see this huge spike. And everybody knows there's a huge spike, but we're trying to make sure the information is consistent with what we've seen in prior years and what we expect to see in future years. So you don't see on this presentation a new fund we created called 1041, which is to deal with the $98 million or $97 million in ARPA money. So that will be something that will be a 2022 project to make sure that we're isolating so that we can track the impact of that. So.
Good, thanks. Other questions? Okay, thank you, Mark.
You're welcome.
Appreciate it. Who's our next participant?
It would be Treasurer Alicia Topper and Assessor Peter Van Norwick.
Okay, great. Thank you.
Hello? Is Alicia there also? Can
I
you
am,
delete-
yes. Good morning, council.
Oh, yes.
So I'm not driving the PowerPoint. I think there will be someone. We'll just go ahead and say next slide. There are quite a few transitions in the slide. So I think, Peter, to advance, you'll just have to say click or transition, unless there's a way that I can have the PowerPoint controlled here on my side.
Well, I think the way that maybe that they have it, maybe the transitions won't be there, so we'll have to see.
Okay, very good. Well, good morning. It's
Yeah,
a
good
great day
morning.
to talk about property taxes. Well, you heard quite a bit about the various funds at the county, but today we want to take a deeper dive into one of the general fund's largest source, which is property taxes. Peter and I are going to go over our tax statement and also how levy is created in the budget and your impacts of your decisions on the general fund and property tax revenue. So with that, the first slide gives you an overview. When I bill property taxes, it isn't just based on the county and the county's budget. We have what we call a universal tax statement, and I'm billing taxes on behalf of cities and towns, ports, the state of Washington through their state schools tax, library district, fire districts, and also our individual school districts. Those revenues can go up or down based on voter approved levies or bonds, and also based on the budgets that the governing boards pass each year. So in total, my office billed $795.8 million, and we will collect 99% of those taxes billed. And of that, the county's percent is 9.7%, and then county roads is about 5.6%. So it's a relatively small amount of the overall bill. And on the next slide, I give just a quick example of what that might look like on a tax statement for a taxpayer. So this is my property tax bill, and this is the distribution. So on the front page of the bill, it really breaks out how much you're paying and for what. And you'll notice on this particular statement that 35%, a little over 35%, was voter approved taxes. So that wasn't based on what was approved by those governing boards, but voters chose to contribute towards levies or bonds or special projects. The other thing that's notable on this property tax statement distribution breakdown is that a large portion goes to schools. We have both the state and state Part 2 schools tax in addition to the local schools tax that we pay. So for my property tax bill in this example, I paid $1,336 to schools out of my $4,100 bill. And then on the next slide, Peter's going to describe how just the county portion is determined, but in general, how does he create the levy rate and how does he get the tax roll to me so I can create those statements?
All right, thank you, Alicia. Yeah, basically, I want to always go over the formula for how property taxes work. And so the key first thing is the budget amount, and that is provided by each separate taxing district. And that is sent to me with a dollar amount down to the penny. So we have no control over that budget levy amount in the assessor's office. That's determined by either the voters of a taxing district or their elected representatives in that taxing district. Then what we do is we take the total assessed value and we divide that and we come up with a tax levy rate. Once we have that tax levy rate, we take an individual property's assessed value. We times that by the tax levy rate for each of the taxing district, and then we send it over to the treasurer's office, and that goes on to the tax bill. So next slide, please. So just to give you an idea, we cover all of Clark County. A lot of times people don't realize that we do both the cities and the county. In Clark County for 2021, the total assessed value is $82,052,089,813 in total property value in Clark County. So as you can see, we have very valuable a tax base here in Clark County, and it's increasing every year. Next slide, please. All right, so the main thing to understand is people will come and talk to you about maybe assessments and realize that in the assessor's office, we do what is called mass appraisal. And so in this example, I have 7 different homes, and I always say, let's say maybe they're in an Ajo subdivision, they're completely identical. No one can really tell the difference of them. But as you can see from each of these sold prices, homes sell for a range of value, and some will sell at the bottom of the range of value. So in this case, 200,000 is the bottom of the range, and then some sell the top of the range, and that one that sold for 220,000. So every home does have a range of value. So next slide. So what we have to do when we do mass appraisal is we have to value everything in equity and at 100% of market value. So when we're going through that, the house is sold for 200,000, the house is sold for 220, because they are essentially identical in terms of their characteristics. Because a mass appraisal, we're really valuing characteristics, not necessarily the house itself. All of those homes, because they have the same basic characteristics, they're going to get the same assessed value. So we're going to place assessed value in that case, probably about 210,000, which brings, total assessed value to 1.47 million. Next slide, please. So just again, reminding that the Clark County Council established the amount of property tax revenue needed to fund the budget. That's the question that you're going to be answering in November. Where does that number come from? Because a lot of times people, as soon as we send out the tax bills and they see an increase in assessed values, the first thing they start doing is calling up our office, calling up counselors, calling up city councilors, asking, what's this going to do to my property taxes? And the truth is, we don't know until each of those tax districts have spoken with their budget and the voters have spoken at the ballot box. Next slide, please. So in this example here, we're just assuming that there's a $10,000 budget. Again, we have the formula tax district budget by the total assessed value equals the tax rate. So if we have the budget is $10,000, the 7 times 210,000 is the 1.47 million, gives you a tax rate of 0.00682721. And let's just say, for example, the next year the values increased and there was no increase in the budget from the taxing districts. So that would take the home values from 210,000 to 231,000. And you see if you do the 7 times the 231, now the total assessed value is 1.617 million and the tax rate is 0.0061824,292. But you realize, see, it didn't make any difference in what everyone's property taxes were, because in the end, we are getting it down to what is the budget that's provided by each of the taxing districts and what is provided to the assessor's office for us to collect. So whether assessed values go down or they go up, we have that variable tax rate that will ensure that we are bringing in the exact amount that we were requested to by the taxing district. Okay, next slide.
So this is just another way to look at that example. This is the back of your property tax statement, and this breaks out the aggregated line items that you saw in that prior slide. This breaks it down by what is voted and what is non-voted, and the levy amount for the prior year and the current year. So for Clark County, if you see the highlighted yellow portion, those 2 line items are Clark County and county roads. This home had an assessed value increase of 4.64% from the prior year, but their county portion of taxes increased less than 1%. So their overall tax amount, if you see the percent of difference in tax, it increased more than the county's portion, but that was because of other districts that had increased their levy rates. For example, in blue, you'll see Fire District 6. In 2020, they had a rate of $1.16 and some change. Then the next year they had $1.50. And so you'll see there was a significant increase, which was a 34.99% increase in taxes. So if you are visiting with taxpayers or constituents and they bring up their concerns about the increase in taxes, I would say as a county elected official, the majority of those increases are outside of your control, and the increases that you're making on the tax statement are very small in comparison to the overall universal statement. I think that's one of the downfalls of having a combined tax statement is because it's our logo, you probably hear a lot of the concerns, but in actuality, it's other taxing districts who are making decisions, or voters that are making decisions for themselves to increase taxes. Next slide. So one other way of looking at Peter's example about home values going up and how it impacts your tax statement. We have two homes here. Year one, you'll see at the top of the chart, home one was $50,000 in assessed value and home two was $50,000 in assessed value. Their levy rate was $2. So for each of those homes, they had a $100 tax bill. The next year, home one's assessed value, they must have had some really great improvements. It went up to $150,000, and home two's value stayed the same at $50,000. So you would assume that home two's tax statement would be exactly the same in year two. And this was with taking a 1% increase in the budget. But instead, home two's property tax bill decreased by 50% and home one's increased. So even though you increased the budget by 1%, home two paid half of what they paid the prior year. And this happens all across the county, depending on, as Peter said, assessed values, rates, and budgets that are submitted by the various districts. And this was actually an MSRC example, and I thought it illustrated this complexity really well. Next slide. And back to Peter.
Yeah, so this slide is actually just kind of giving you a snapshot of what is happening in Clark County. So the median home sales price, and this is all based upon RMLS data in mid 2020, was $389,900, and in 2021 it's $476,800. What we're seeing now in Clark County is most of our homes are selling for over $500,000, but that was a 22.2% increase in the median home price in Clark County over the past year. And of course, we've seen this across the nation, but just wanted to, bring this home to you that that is also happening in Clark County. So next slide, please. Now, most of the properties, though, in Clark County, they only went up, our assessed values went up about 11%. And so if we took that median home price before and adjusted by the 11%, and then we took in last year's budget and figured in the new construction, and what would property taxes increases look like if you took the 1% or without the 1% increase. So if you were to take the 1% increase on a median price home, you're looking at an increase of about $13.30 or 3.55% of their tax bill. And without the 1% property tax increase, you're looking at about $9.40 or a 2.5% increase. And so you're talking about a property tax difference between taking the 1% or not of about $3.90 per thousand. Next slide.
So just as an overview for everyone who's watching at home, I know you all know this very well, but property taxes are the largest, one of the largest sources for our general fund, which is the unrestricted money that you use for so many of the services that each of us enjoy every day, which includes law and justice, our public safety through the sheriff's office, our elections, assessments, treasury, public health, jail operations, recording, and more. So we just put this slide together just to remind folks that we do have a great value here in Clark County for the tax dollars that we pay. And I want to thank you for supporting all these important programs and for your time this morning. So I think the next slide, we're open to answer any questions. Oh, wait,
Yeah.
Peter had one more point, I think.
And so this next slide, I just thought it would be interesting for you to see what's been happening with the Clark County tax rate compared to the fire districts, because 70% of our budget goes to law and justice, and we're fire districts, of course, they all go toward 100% toward the fire district. So in 2015, the Clark County tax rate was 92% of the median fire rate. And what I did is I took all the different fire districts, what their tax rates were, and came up with their median tax rate. So half higher, half lower. And at that point, we were, at 92%. And of course, as values increased, by 2019, we had fallen to 85%. But then what happened is a lot of the fire districts, because they needed more money to run the fire districts, they went out and they got voter approval. And so at this point, we're actually running about 68% of what the fire districts do. And I know that Councilor McVie has been talking a lot about property tax or leakage of sales tax. And one of the things about property taxes and why it is kind of the base is there can be no leakage. Anyone that lives in Clark County, either directly or indirectly, pays property taxes. And in essence, kind of what we're seeing here in terms of on the executive branch is we're almost having a systematic defunding of law and justice, because we're just not keeping up with the expenses and what other districts out there that are providing similar services to law and justice are actually asking voters to pay. So on that property tax bill, which was the earlier slide, and Alicia said it was hers, but in actuality it was mine because we decided to switch to one that was in the county. I'm actually paying double to my fire district what I'm paying to the county for law and justice. And of course, a number of years ago, that wasn't, the case. So as we become more and more dependent on sales tax to provide that law and justice, it does open us up to more risk from the leakage that we have. And so that's just information to provide you with, what we're seeing compared to the other taxing districts. And, we hear a lot of times that voters don't support a tax increase, but clearly they do for fire districts. And I think law and justice is also something that our taxpayers really do support. I've been listening to the sheriff candidates that are out there, and a lot of them have talked about how we have kind of the least number of deputies per 1,000 of all the counties in the state of Washington. And, Mark talked about the how much is going to salaries, and if we don't keep up, we can't afford to add and have the deputies that we have. We just went over 500,000 in population. We're adding a lot of new construction, and right now we're being very constrained on getting the support staff that we need to maintain, the law and justice for that 500,000. So that was just the purpose of the slide, to kind of address the leakage that Councilor Medvey has been talking about. So next slide.
Now it's
take any questions anyone has.
Are there questions?
I have a question.
Councilor Barr?
Peter, would you please go back 2 or 3 slides to the one that concluded with the $3.90 difference in the property bills? Yes.
Yes.
This is the one. Would you please extend out that $3.90? Is that per thousand? Would you explain what that figure would mean to the average property owner?
No, that was the 390 cents was for a median valued home. that it had increased an assessed value of 11%. The $309.90 is the total difference in their tax bill.
So if
we're talking-
one's home value is, say, 476,800 in 2021, then that would be the difference.
Not necessarily, because I took it from what was the prior year and brought it up, because our assessed values, a lot of that value increases happened after, so our assessed values only went up 11%. So I took the prior year's median and raised it the 11%, which we raised the assessments. And
So if their value was 390,000, then that
Yes.
390 would be the figure.
yes, yeah. So of course, if your house is worth more, it's going to be a little bit higher, and obviously if it's less, it's going to be a little bit less. But the main focus is what really kind of, for the median household in Clark County, what is the difference. And I do also want to bring to your attention, right, even without a 10% or the 1% increase, property values or property taxes for that house are going to be going up 2.5% on the county portion, just from the amount of new construction that we've been adding. Because as I've had a number of you in and talk to you, when new construction revenue, all of it is not paid by new construction, just because the way it works is some of it bleeds over onto the tax base. And so that increase is based upon the fact that we had new construction and how much values had increased from the time we placed it on new construction, the drop of the tax rate, and what that does for the entire tax base. So I'm just kind of trying to give you a picture of what is happening out there in property taxes and to the property taxpayers.
I have a question about the last graph that you showed, the difference between fire districts and the county tax. Does population come into that at all? Is there any way that population affects this?
Well, like I said, what I did is I just took at all the different tax districts or the fire districts, what rate they were getting and what that was comparison. So for people out in our unincorporated county, they have the fire districts. What were they paying for law and justice through property taxes in comparison to what they were paying for fire? And so, the fact that, like I said, on my personal property tax bill, it's about double, but it looks like across the county for most people, they're paying about 68%, where before they were paying about 92%. So,
yeah, and to Council Chair Quiring's question, I think, you would think of it like population should make a difference, but when it comes to property taxes, we deal in parcels, the number of properties and their assessed values, which can be independent of how many people are in a county. But when it comes to service levels and what level you want to provide the people you serve, that's where it comes into play when they're making a decision about what level of service for the population.
Yeah, understood with that. It's true, very true. I just find it easier for fire districts to be able to get their levies passed. I think people are very conscious of the fact that they're first responders, and there's great danger for people's most precious and highest value asset and their families could be hurt, and therefore they're willing. I know in North County, for instance, having served on the board, the EMS board there, and they are a fire station as well. I mean, those people are just very willing to pay for these services because they're good services. I mean, they're EMS, they don't have other folks to respond. And so these first responders are very precious to them, and they don't mind paying for it. So,
Eileen, the only thing is I would respond to, we are also first responders at the county, right? 70% of ours is law and justice. And I think maybe that's a message that we need to be getting out there. A lot of times people don't think of when there's disasters, the assessor's office, but like when there's a tornado that hits, like when Battleground, those places, I go out there and drive, we find the houses that were damaged, you know, we send information out there for them to, the things that they can do to, you know, get off their assessed values because of the damage that they provided, you know, destroyed properties. There's different things that we do in the county, and, you know, we do provide, say 70% is law and justice. And I think law and justice is as important to people as fire. And I think that's the message that we need to be projecting, is our executive branch does provide first responder services.
Yeah, and you get no disagreement from me at all. I think it should be our message. It certainly is my message that the largest portion of our general fund does go to our law and justice. And furthermore, I mean, there are services that we provide. I know there are also ordinances and code that we pass that create the the opportunity for us to serve, because we have to enforce those as well. But that said, I do believe that, and I guess maybe we'll find out this November about how much people want to fund law and justice, law enforcement, juvenile justice, jail, so that we can have, you know, body worn cameras and dash cams, etc. But at any rate, it definitely is a message that we need to send, and certainly I say it. That's the biggest portion of our budget. So anyway, thank
Yeah,
you.
I think
Question?
you're right. That will tell us a lot in November.
Any other questions or comments?
I do, Madam Chair.
Councilman.
So first of all, Peter and Alicia, thank you so much for this presentation once again, and all the work you do. There are two areas that I wanted to ask about, and there's somewhat follow-up to discussion that's already occurred. The first goes to Karen Bowerman's question, the 390 increase based on the 11.2% appraised or assessed value going up. Does that include all of those other fees that are based on assessed value of, you know, per thousand? So when you say $3.90 will accrue as a result of 11.2%, does that include all of the other assessed values that are based on the value of your home?
Okay, so that was just the general fund, the county general fund.
Okay.
I was not looking at anything else. I took basically what last year's was, plus the new construction dollars that we added, plus if you took the 1% or not, and what the assessed values was, and what the tax rate would be, and then did to the medium value home with 11% assessed value increase, and this is what the difference would be.
Okay.
That's how,
Yeah,
that was the
thank you.
math behind
I
that.
wanted to highlight that. So it is more than $3.90 because of all the other things that people agreed to be assessed on. The other question really goes somewhat to what Eileen was asking. And I recently had a conversation with one of our local chiefs, fire departments. You know, that like our criminal justice system, you know, it's not a pay-as-you-go system. The civil courts kind of reimburse the system a little bit for the services of the courts. But the fire is about the same thing. You know, you have 2, 3, 4 alarm fire. All the different responding departments don't get reimbursed for it, and the property owner doesn't get a bill for the fire suppression unless it was a criminal act of some kind. So those two areas are problematic in that they're not pay-as-you-go services that the county provides. So going to my conversation with the chief, and some of the constituents as well, I mean, some people do regale against the high fire costs, fire suppression costs for first responder. It would be better to have some kind of regional funding. So for instance, he's fired, you know, when they're doing, and everyone relies so heavily on mutual support when they're working outside of their own area of responsibility, they don't really have pay reimbursement or funding reimbursement revenue streams. What do other counties do? Are they all set up the same, or do fire districts? Is there a different model for regional funding that could be more stable and more fair, and not rely on levies every now and then as populations grow?
Well, to be honest, I haven't looked at really what a lot of, but most of it, of the counties across are set up similar, right? Where you have the fire districts that have been set up by the people in areas to provide fire service. So if you're talking about something that was regional, that would either be state funding, which would probably mean the state property tax, or county, right? I mean, that would be the other. We have a number of fire districts, so county would be regional, and maybe you'd have to implement something like a county property tax that would then, go on the bill to help out the other, fire districts. That's the only kind of regional thing I could think of. We are as a county, a regional service provider already in ourselves, so.
Okay, thank you.
I mean, ultimately, it all comes down to still having to generate revenue to pay for service. And there will be a change to state schools too when they passed the McCleary decision and the legislature put state schools 2 on the tax bill. They set a date to make that a budget-based system versus rate. So as assessed values go up, the rate stays and you're getting taxed higher because it's not going down as the rate's not decreasing as your assessed value is increasing. So they're supposed to set that in 2022. So next year, hopefully, we'll learn what the rate will be for state schools, and hopefully we'll see some leveling off on the amount that are being billed on state schools too.
So what Alicia's saying is that state schools property taxes, the tax rate probably will be significantly less than it was the year before because it wasn't a fixed base rate system. It's switching back to the variable base rate system, which with the huge increases in assessed values across the state is going to see a sharp decrease in that tax rate.
That's right, which to your point, Gary, then tax bills would go down. So your 1% wouldn't be as significant if you decided to take that to fund county services.
And Madam Chair, can I?
Go ahead. I was going to, yeah, I was going to say something too, but I may lose the thought before.
Kind of a public service announcement related to all of our discussion. The state does have, and I believe it's bipartisan, it may not be, but does have a task force looking at reforming our taxing system in Washington State. And obviously a portion of that I'm tilting at is the tax leakage issue. But there are 2 local virtual open houses today, I think, for Clark County. They're looking for citizens, not political input, but citizenry to call in and tell them what their issues are with our taxing system, because they are hoping to bring some reform to Washington State. And I believe that's happening today, and there are 2 scheduled for Clark County.
Yes, that's right, Gary. I know there's one, I think late this afternoon, like 5:30 or 6:30 or something. So that would be good for citizens. One comment I was going to make is, the Supreme Court did this McCleary decision, and that's how we got this second school tax. Now we have the Blake decision. And I just wonder if that is going to end up on our tax bill as well, because that is a huge decision, which is very costly. And thus far, I'm sure that what we just acted on last evening, for instance, accepting these Blake decision funds is not going to, it'll be a drop in the bucket, is my thought. But that was just a passing remark here about McCleary, what the Supreme Court does, and then how we have to, fund what their decisions are. So Any other questions? Okay, thank you both. This is always helpful. I
All
think
right, well, thank you.
these graphs and explanations are always helpful and good reminders.
Well, thank you. And for all of you and also for anyone at home watching, our offices are always open. So feel free to reach out to us, call if you have questions. Love to visit.
Thank you.
Bye.
Bye-bye. Is that the end of our work session, or do we have other presentations? You're muted.
Thank you. That concludes this work session. There is another work session with Public Works on the 2022-2027 Stormwater Capital Plan. Would the council like to take a 5-minute break between work sessions?
Yeah, let's do that.
Okay.
Let's be back at 5:20. Excuse me, 10:20, sorry.
You're fine.
See you in a minute.
Thanks.
5 minutes.